Alrighty, guys, talk about a red day for the stock market. We had all of the indexes down in a major way, like I'm sure all of you know at this point. We downtrended all day. The S&P went down 1.4%. The Dow Jones went down 1.2%, as you guys can see, with the NASDAQ down 2.4%, and the Russell leading the losses down over 3%. You heard that right, guys. 3% red day for the Russell, and we have a lot to cover in this video from the indexes very quickly, but most importantly, 5 companies that just reported earnings. So guys, hit the like button, make sure to subscribe, and don't forget to get up to 20 stocks from Moomoo with at least a $100 deposit. Use that link down below or go to stocksurfs.com/Moomoo. Get your money. And with that being said, guys, let's dive right into the video. So like I said, we downtrended all day today, and the VIX went up over 13%. And I think at one point it was up almost 20%, wasn't it? I mean, holy smokes, guys. The VIX got to almost 20 points. And yeah, it was up 19.6% roughly at the peak. And it was a bad day. Let's just put it that way. Bad day to be, I guess, long the stock market. But if you have a long-term vision here, this is actually a good sign. You can buy stocks at cheaper prices, and stocks that were going up like crazy, now they're finally coming down to prices that seem like a decent deal. Not all stocks, don't get me wrong. There's still a lot of overvalued stocks out there, but a lot of these tech stocks that were just on complete heaters, they've cooled off, and they look pretty decent, right? So let's break down some companies now, guys. I don't want to go too in-depth on the indexes in this video. I think we did talk about them earlier today. I forget, maybe it was the first video, so go check that one out. But overall, we're still in this downwards channel on the 4-hour chart on SPY. You can probably see it better on the 20-day chart. You guys see that. And on Triple Q, same thing. We're still trading in this channel, and we're actually at the bottom of the channel here on Triple Q, guys. Let me get some water, by the way. Cheers, guys. There we go. So, yeah, market dominated by the bulls today, and we got some earnings that I want to break down. Apple being number one, ticker symbol AAPL. And this thing is currently at break even, but talk about volatility after the bell. I mean, guys, Apple closed at 218. It got up to 223, down to 212. Now we're back to 221, 220. And this is on a double beat. Let me show you guys what Apple did. GAAP EPS of $1.40 versus $1.35 expected. So they beat EPS and they beat on revenue, 85.8 versus $84.53 billion. And I think iPhone sales, let me see here, guys. iPhone sales beat, 39.29 versus, it says 39.66 prior. Maybe that's from last year, but I'm pretty positive they beat. I was reading the report on a different source. But sometimes Thinkorswim here on the live news tab, they get some typos. But either way, guys, double beat. iPhone revenue beat. Let's see, guidance here. iPad sales were at 7.16 billion versus 6.65 billion expected. Services 24.2 versus 24 billion dollars. Mac sales 7 billion versus 6.84 from last year. All right, iPad sales grew big time. Oh my God, 7.16 billion versus 5.79 billion from last year. And let me see, China, Greater China net sales 14.72 versus 15.75 from last year. So China sales, guys, are down $1 billion year over year. Pretty insane there. But overall, the big reason why the stock is pretty much up a little bit, pretty much break even, but up a little bit, is because they beat revenue, beat EPS, and iPhone revenue, guys. iPhone revenue is holding up nicely. It beat And yeah, I mean, that's what really pushes Apple stock and at least holds it up after earnings. But I'm still worried about this head and shoulders that we have right here. I called this out in my last video, I believe. We talked about it. So keep your eyes on that. That could easily still play out. In fact, it is playing out on Amazon, guys, which is stock number 2. This company reported earnings, and we talked about the head and shoulders in one of my previous videos today. And look, it's playing out. We have the left shoulder, the head, the right shoulder. Now we're dumping down to about $173 per share. We're down $11 after the bell on Amazon. And full disclosure, guys, I'm long Amazon. I'm not long Apple right now, but I am long Amazon. And let's see what they did. The company ended up reporting, let's see here, guys, GAAP EPS of $1.26 versus the $1.03 expected. That beat, but sales missed. $147.97 billion versus $148.55 billion expected. So slight miss in sales there, and I think their guidance for sales was a little weak. Yeah, it looks like they're guiding for Q3 sales of 154 to 158.5 billion versus 158.3 billion expected. So missed revenue. Sales guidance is a tad bit soft for Q3, and that's all it takes, guys. Literally that's all it takes for a stock to go down. And I mean, initially it went down. Now it's rebounding a bit, but you guys can see, wait a second, hold on. Did you guys see that? I got it on the video. I'm not sure if you saw that, but it ripped all the way to 184 for a blip there. Now we're back down to 174. So we're still down $10. For a second we weren't. We shot up. I don't know what's going on here, but yeah, we're down a little bit. And at the end of the day, for a stock that's gone up a lot, this is not that bad. I mean, look, we're only down, 15, maybe 20% from all-time highs? Not even, man. Look, from 201 to 174. Guys, this thing's not even down 14%. It's 13% in the red. This is just a simple pullback on a stock that's still up big time year to date. And it's the same thing on Apple. I mean, it's not pulling back today, but it's been pulling back the last couple of days. But still, it's up so much year to date, guys. You can't expect these stocks to just go up forever, up and to the right. There's going to be times of pullbacks, and that's what we're getting right now. So Amazon, like I said, I'm long. I'll probably buy more. I'm not in the rush to buy more at this point, but if it does come down under 170, maybe under one, maybe even here, I might nibble a little bit, but under 170, under 165, I'll definitely be a buyer of Amazon. And let's see what Coinbase did. This company just reported earnings as well, and it looks like their stock's not doing much. Looks like it's up around $6 after the bell. So Coinbase did adjusted or GAAP EPS of 14 cents. Not seeing what the estimate was on that, but sales $1.44 billion versus $1.39 billion. So they beat on sales, and it looks like here they're guiding for subscription revenue and services revenue for Q3 of 530 to 600 million versus 564 million expected. Not bad. Looks like here Bitcoin, 35% of trading volumes and more. So a lot of their trading volumes are in Bitcoin, which honestly, I like that. That's good. Let's see. Transaction revenues fall. Subscription and services revenue jumps. All right. Pretty good. So, yeah, Coinbase, guys, on the charts, if I pull this up on the 4-hour, by the way, we went down 5% heading into earnings today. So we're up a little bit after the bell, but still, we're down from where we were yesterday. Keep that in mind. And here on the 4-hour chart, guys, we've been trading flat for months. I mean, you guys can see it if I get the channel tool. We've been trading flat for months. I mean, guys, look at this. Clear resistance at about 280, 275 with clear support at about 200, 205, 210, kind of where we're getting at right now. So Coinbase, honestly, I think this could be a nice trading opportunity here in the low 200s if we get a nice sharp bounce back, which Let's see, guys. Time will tell. We're not quite yet getting the confirmation, but maybe here as the market digests earnings, we'll get that confirmation, right? So Coinbase, I like the setup right now. A bit over sold. We do have a bullish divergence. It looks like trying to form here. So Intel, guys, wait till you see Intel. But actually, first, by the way, feel free to sign up to my email list, guys. First link down below. If you want me to send you my top 3 stocks for free right to your email every single Monday morning, guys, all you have to do is put your first name and your email. First link down below. And did I mention it's free? It's free. No BS emails, no spamming, just straight up stocks and charts every Monday morning. My top 3 stocks. So sign up down below, guys. And Intel I saw is completely crashing. It's in free fall mode, completely a falling knife right now. This is a disaster for Intel, guys. So it's down, I think, it went down 5.5% on the day. Think about that. Now it's down another, looks like 20 after the bell. So we're down almost 25% from where we closed at yesterday. A quarter of the company, think about that, a quarter of the company's value cut in about 24 hours. That's it's rough. It's got to be rough being an Intel shareholder and working at the company right now, seeing this big drawdown. I mean, the board of directors, man, the management team, they're probably crapping their pants right now. It is what it is. But look, Intel reported, and by the way, I used to be in Intel stock and I cut my losses on it. I was in it at 45, 50 bucks. Thank God I got out of this stock because look, now we're at 23 bucks, and that's a lesson. Sometimes when you're in a stock, maybe you have a weird feeling about it. It's not really going right. Maybe it's good to sell out, especially if you kind of see the writing on the wall. They report a bad quarter, and you were kind of iffy about the earnings call. Sometimes it's better to just sell out, cut your losses early instead of holding on and hoping and praying and hoping it does this or that. So, yeah, I got out of Intel, guys. And what the heck? You guys see these weird candles right here? Yeah, that confused me. That almost tricked me there for a second. I'm like, wait, is it back to 25, 29? No, it's not. But Intel, it looks like they ended up doing 2 cents of adjusted EPS, which missed the 10 cents expected. Oh my! And their sales missed 12.84 versus 12.94 billion. So a double miss for Intel, and they guided for a Q3 loss of 3 cents per share on revenue of 12.5 to 13.5 billion, which is well under the 31 cent per share profit expected on $14.4 billion of revenue, guys. I mean, this is a disaster, right? Double miss. Not only did they double miss, but they guided down big time for Q3 EPS and revenue. This is really bad, guys. So, yeah, like I said, board of directors, the management team, they're definitely crapping their pants right now. Stock's down 20% after the bell, and it looks like we're down 50% year to date. I mean, this is just a disaster for Intel, and now we're pretty much back to where we were in 2012, 12 years ago on the stock. This is freaking nuts, man. So the last one we're going to cover today, guys, is Block, also known as Square. And by the way, if you guys stuck till the end, I appreciate you guys as always. Hit that like button. Make sure to subscribe if you haven't done so already. We're trying to get to 100,000 subs on this channel, guys. So Block, Square, let's break it down. We can see here Block ended up doing GAAP EPS of 31 cents, which missed the 34 cents expected, and sales also missed, so a double miss out of Block, 6.11 versus 6.27 billion expected. But it looks like here anything on guidance, I'm not seeing anything, but it looks like gross profit up 17%. That's pretty good news. Let's see, anything else? They boosted their earnings outlook and says Square marketing efforts are paying off. So this is an example of a company, a stock that double missed, and shareholders are overlooking it because guidance was pretty decent, right? And that's why the stock's up around 5-6% after the bell. This is not what we saw though with Intel. Not only did Intel double miss, but they also reported awful guidance. So that's why that one's down 20%, and Square's holding up a little bit here, after earnings. But then again, Square is down so much. I mean, maybe that was already priced in. The stock's down 30% since the middle of March, and the chart, quite frankly, looks like crap. But yeah, guys, that's pretty much it for the video. We covered Apple, Amazon, Coinbase, Intel, and Square. And there's going to be more breakdowns. So again, make sure to subscribe, hit the like button, and don't forget to get up to 20 stocks for Moomoo with at least a $100 deposit, and your uninvested cash for a limited time will earn up to 8.1% APY. That's linked down below, guys, or go to stocksurfs.com/Moomoo. Get your money. And with that being said, cheers. I'll catch you all in the next video.